welcome to The View from ADB. We are in Frankfurt for the Asian Development Bank annual meeting, and today I am joined by Andreas Dombret, member of the board of the Deutsche Bundesbank. Thank you very much for joining us.
Thank you for inviting me.
So, Mr. Dombret, yesterday we were on the same panel talking about Asia-Europe macro links. You came out and said that you're a very strong advocate of having a functioning capital markets union in Europe. Why do you think it is so necessary at the moment?
In times when there are challenges for a monetary union, it's always good to go integration steps and go further. The real integration step of having a European finance ministry is not something I see happening very, very soon, because it would actually mean that sovereign nations in the Eurozone would have to give up sovereignty over their fiscal policy, which is not really something which is going to happen overnight. So if you cannot do the big jump and you want to integrate more, then you have to go step by step. And we did go the step of having a single supervisor. We have a single resolution agency now. But what we are missing is a more harmonization in capital markets. This does not mean that we do not want a bank-based model anymore. I mean, most of the countries in the European Union, with the exception of the United Kingdom, are more lending-based than capital market-based. We don't want to replace that, but we think that in difficult times, if you only rely on one source of funding, whichever it is, you are making yourself vulnerable, and it's ever so much better to have two sources of funding if you want to be standing on two legs. And that's why a capital markets union can complement what we already have without replacing it.
And without having too much focus on bank lending, especially for SMEs, for instance, etc.
You know, there is no big advantage of capital markets lending over bank lending because all the empirical studies I have read actually tell you that it's not a either-or question. It's more that you don't want to rely only on one source of funding. And that's why one of the two main motives of the European Capital Markets Union is to diversify funding sources. The second big motive is that you become more efficient and effective in risk sharing by having both sources of funding.
Diversification.
Higher diversification.
In terms of the main hurdles that you think are stopping the Capital Markets Union from reaching its potential at the moment?
Yeah, it is anyhow a pretty new project because the Green Book was only published last year, so expectation level shouldn't also be too high. What I personally feel is that there are some lower hanging fruit, and those are the ones we need to target now. Let me give you some examples. The EU Commission has rightly started to think about securitization. If you compare securitization in the European Union vis-à-vis the United States of America, actually those securitized assets stayed more stable than during the crisis in the US, but are much lower yielding, and the performance is poorer than in the United States. So we need to correct that. And that's why this initiative of the EU Commission on single, transparent and standardized securitization is a good one. That's a low-hanging fruit. Also, why do we need different prospectuses for IPOs in each and every single country? Other harmonization, for example, would be, why don't we harmonize what is exactly a non-performing loan? After how many days of non-payment do you become non-performing? Can you become performing if you start paying again in full or partially, etc., etc.? The more difficult issues, but also very promising ones, would be to think about harmonization with regard to insolvency laws, because that is, of course, affecting banks and their ability to go to the assets. And the most important project, at least in my mind, is that we think about tax reform. This is a very, very high-hanging fruit in a way, but as we are now in the situation we are in right now, debt is privileged over equity, because you obviously can deduct interest in a tax-efficient manner. So we are biased towards debt, with all the negatives of being biased towards debt, and that's why a more tax-neutral way of thinking about taxation makes so much sense.
And in terms of having reaching a fully implemented and standardized capital markets union in Europe, how could that help also to bolster its links to other regions such as Asia? Also in Asia, they're trying to find, a common economic model across different countries. I'm thinking of ASEAN. How could that help?
I'm not the biggest expert in the Asian region, I have to say, although I try to spend a lot of time there and learn as much as I can. Is the European Capital Markets Union a blueprint for Asia? I'm not so sure. For sure, not in a one-on-one way you can compare things, but of course, many countries in Asia are also very lending-based, and you may think about what you can do in order to create capital markets. That's why the World Bank and my institution, the Deutsche Bundesbank, we are working together on ideas how you can develop local bond markets in order to become a little bit less dependent on only one source of funding. I think that each area, be it Asia, be it Europe, they have to do their own harmonization standards, and that will help them have a more prominent role, become more dependent, and create more welfare. So it's not necessarily something between Europe and Asia right now. In the medium term, of course, that would also help.
Perfect. Well, thank you so much for joining us, and good luck with the rest of the meeting.
Thank you. You too.